Whenever the transactions have taken place, immediately we will record those transactions in a chronological order in journal. That is, we call it as book of original entry. Whatever the transactions we are going to record in the books of account, it should be expressed in terms of money. We are going to prepare a report where it has to be communicated to the respective users. It may be internal users or external users. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidyashram First Grade College, the Temple of Excellence, Mysore. My dear students, today we are in the second session of Unit 1, that is Unit 1 of the subject Financial Accounting 1, and this is for first sem BCom student, and the Unit 1 is all about Introduction to Financial Accounting. So already we have discussed few of the concepts in this particular unit, so let us quickly recall what we have discussed in a previous session. So in my previous session, I have covered this topic, that is, we have learned about accounting. So we had a brief introduction about accounting. Then we have learned about definition of accounting, which is given by American Institute of Certified Public Accountant. So how they have defined accounting? Accounting is an art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. So this is an important definition which is given by American Institute of Certified Public Accountants. So next we have learnt about characteristics of accounting. So if we know the definition of accounting, it is very easy to recall the characteristics. Next we have learned the concept, that is objectives of accounting. So in today's session we shall continue with a new concept, that is scope of accounting. So what is the scope of accounting in the business organization? So why this accounting is that important in the business organization? So let us see one by one here. So accounting is concerned with the financial transactions and events which bring about the change in the resource or wealth position of the business firm. Now, why this accounting is very important in a business organization? As I have already discussed, so in accounting what we are going to do? We are going to record only those transactions which can be measured in terms of money. So, we will call that finance is the lifeblood of the business, without which the business organization cannot run. So, whenever or if so, the finance is so important in the organization, it means that the record of financial transaction is also very important, because without finance, business organization cannot work. Then its importance is that much huge, so that we have to record or we have to keep a record of those financial transactions, correct? So, if we have a proper record of the financial transaction, we'll come to know the exact financial position of the business. So, thereby accounting is concerned with financial transactions and events which brings lot of change in the organization, whereby we'll come to know the exact financial position of the business. Next is, such organization have to be identified. So, here these financial transactions have to be identified first as and when they occur. Of course, what we are going to do in journal, so whenever the transactions have taken place, immediately we will record those transactions in a chronological order in journal. That is, we call it as book of original entry. So it is not difficult, because there will be a proof in the form of bill or receipt called as vouchers. Now, how we are going to record the transactions? So whenever we will record the transaction in the books of account, it should have a proper documentary evidence, which we call it as vouchers. Now what is an voucher? Voucher is a documentary evidence in support of a business transaction. Now for example, I want to record a particular transaction in my books of accounts. Okay, so a recording of this transaction should be evidenced by a voucher. It may be a receipt or it may be any cash memo. So whenever I record each and every transaction, it should have a proper documentary evidence. In the sense, whenever I record a particular transaction, I should have a proof for that recorded transaction, which is called as what? Vouchers. So it's not an easy task where we cannot record all type of transaction. We will record those transactions which are of monetary terms, and on the other hand, it should have a proper documentary evidence. With the help of these bills and receipts, identification of transaction is easy. For example, when you purchase something, you will get a bill. Correct? So, when you purchase something, you will get a bill. So, this bill acts as a documentary evidence, or it is called as what? Voucher. When you make payment, you get a receipt. So, here receipt is a documentary evidence. Now, what you have to remember here? Under scope of the transaction, we will record those transactions in the books of account which are of financial in nature, and we cannot record the transaction as per our wish. It should have a proper documentary evidence which is called as what? Vouchers. And the second one is, these transactions are to be measured or expressed in terms of money if not done already. So what you have to do? Those transactions. So whatever the transactions we are going to record in the books of account, it should be expressed in terms of money. Generally, this problem will not arise because the statement of proof expresses the transactions in terms of money. So, in terms of money, whatever the transaction, however it is important to the organization or the extent of importance in the organization may be anything, but we have to record those transactions which can be properly measured in terms of money. For example, if 10 pens are purchased at a rate of rupees 20 each, then the bill is prepared for rupees 200. So here also it is measured in terms of rupees. But if an event cannot be expressed in monetary terms, it cannot be recorded in the books of account. So the best example is that a resignation of an efficient employee. Even though the resignation of an employee affects the profitability of the business, but we cannot record such type of transaction because it is not measured in terms of money. And the next one is, the transactions which are identified and measured are to be recorded in a book called journal or in one of its subdivisions. So now we will start the recording of transactions. So where do we record the transactions for the first time? In a book called journal, where journal is called as what? Original book of entry, where the transactions are recorded for the first time in its original manner. So, the transactions are recorded in the form of entries in the journal for the first time in a chronological order. The recorded transactions are to be classified with a view to group transactions of similar nature at one place. So, after recording in the transactions in journal, next step is what? We have to classify the transaction. Depending upon the nature of the transaction, depending upon the events of the transaction, we are going to classify the transactions which are there in the journal into individual accounts, which is called as what? Ledger accounts. The work of classification is done in a separate book called as ledger. So, I have already told you the classification of transaction that takes place in a separate book which is called as ledger. In the ledger, a separate account is opened for each and every type of transaction. So, in the ledger, a separate account is opened for each item so that all the transactions relating to it can be brought to one place. So, what we are going to do? So, after recording the transactions in journal, depending upon the nature, we are going to classify the transaction, or we are getting all those transactions in one place in the form of ledger accounts. For example, all payment of salary are brought to salaries account. In the same way, all the cash transactions will be brought into one place which is called as cash account. In the same way, all the purchase transactions which is brought into one place in the form of purchasers account. Like that, depending upon the nature, the transactions are classified. And the next fifth one is, The recording and classification of many transactions will result in mass of financial data. Now, we have recorded the transaction, we have classified the transaction, but all the transactions which are being classified, so that cannot be presented to the users. We have to summarize the data. In the sense, all the unwanted data has to be taken off, or if any corrections has to be made, or if any editing has to be made, so that happens in summarizing. The recording and classification of many transactions will result in a mass of financial data. It is therefore necessary to summarize. Then we have to summarize the data, such data periodically at least once in a year in a significant as well as in meaningful form. So, whatever the data or whatever the transactions which are there in the organization, what we have recorded and classified, it cannot be directly presented to the users. So, we have to present in an understandable manner whereby the users can easily understand the financial information that takes place in summarizing. The summarization is done in the form of profit and loss account. So, where we are going to prepare the profit and loss account, which reveals what? Which reveals the profit made, that is net profit or net loss of an organization, and in the form of balance sheet, or which reveals the financial position of the business. So, in summarizing, we are going to make the accounting information so compressed that it has to be presented in an understandable as well as easy manner to the users, so that they will come to know the net profit or net loss by seeing the trading profit and loss account, and financial position by seeing the balance sheet. Now, coming to the sixth scope of accounting, that is, the summary results will have to be analyzed, interpreted, that is critically explained and communicated to the interested users. So, what is the last stage of accounting information? That is, it has to be communicated to the users. So, if we prepare everything, if we have recorded the transaction, classified the transaction, and we have presented the transaction in an understandable manner, if we keep by ourselves, it is a mere waste. So, what you have to do? We have to communicate. So, we have to critically examine and communicate to the users. Accounting information is generally communicated in the form of a report. So, how we are going to prepare? So, we are going to prepare a report where it has to be communicated to the respective users. It may be internal users or external users. Big organizations generally present printed reports called published accounts. So, what the big organizations will do? So, it will publish their financial statement in the form of published accounts, where it is visible to the respective users of the organization. So, these are all the scope of accounting. Now, coming to the next concept, let us see what are the functions of accounting. The basic functions of accounting in an entity may include the following. So, let us see what are the main functions of accounting. So, the first one is to keep the financial records. So, what is the main function? To keep all the financial records. As I have already told you, so there are a number of transactions that takes place daily in an organization where we cannot keep, or where we don't have that much memory to recall all the transactions. So, for that reason, what we will do? We will record all the transactions, that is of monetary terms, in a particular book, which we called as bookkeeping. Correct? So, accounting help business in maintaining an accurate as well as up-to-date record of the day-to-day business transactions of the entity, such as purchase, product sales, receipts as well as payment. So, the first function is that in order to keep the financial records carefully, or whether it has to be preserved carefully, so here we cannot recall each and every transaction that takes place daily. So, whenever the transaction takes place in an organization, we will record those transactions in a particular books where we maintain books of accounts. So, that is the first function. And the second one is to monitor the financial transaction. So, in order to monitor the financial transaction, accounting plays a very important role. Accountants may track and record multiple financial transactions which are related to payment due to the company and receipts earned by the company to ensure it receives the revenue and remains profitable. So in order to keep the financial transactions, in order to monitor the financial transaction, that is in a particular day, whatever the transaction taken place, what the payment they have made, how much they have received. So like this, the transactions relating to money will have a proper track. In the sense, here the accountant can maintain a proper track. If he is going to record each and every transactions daily, so he'll come to know what is the actual payment and what is the actual receipts in a particular day. And the third one is to prepare the financial reports. Of course, at the end of the financial year, there are a number of users who are dependent on accounting information. For them, the accounting information has to be presented in the form of trading profit and loss account as well as balance sheet, and thereby it has to be communicated in the form of financial reports. So, in the growth of any business, the accountant or other person authorized on this behalf may need to prepare different types of financial reports which can be done after the complete accounting. That is, normally these financial reports are prepared at the end of the financial year, which represents the financial position of the business. It is prepared by the accountant, or on his behalf some other person can also prepare the financial statement. So accounting involves proper detailed monthly, quarterly as well as annual financial reports about the company's assets, liabilities, cash, expenses, incomes. So all these will be included in the financial reports, and it may be done at the end of every month, that is monthly, or for 3 months, that is quarterly, or half yearly for 6 months, or for a particular year. It can be prepared and presented to the users. And the fourth function is that for payment of employees due. By knowing the financial position, even the employees will come to know what is the exact financial position, and thereby the organization will be able to pay their dues. So, the entity can use accounting to make payroll payment, that is, whatever the amount that has to be paid to the employees. So, the employees, those who work in an organization, and what the payment that has to be made to the employees will be done through the accounting. In the sense, they will come to know what is the exact financial position, whether any bonus has to be given or whether any increment has to be made depending upon the financial position. So, that is for payment of employees due. Next one is to maintain digital records. So, accounting may involve creating, maintaining and updating digital accounting system which can be stored digitally for maintaining the company's financial data. So, in order to maintain the financial data for the easy reference or for a longer period of time, so they can maintain digital records where easy reference can also be made, and even the storage is also very easy here. Next, to make the bill payments. So, the functions of accounting also involve checking invoices to ensure that what is the amount of bill that has to be paid to the outsiders. At the same time, what the amount of bill that has to be received from the outsiders. So, that also can be done through this or important functions of accounting. That is, the functions of accounting also involve checking invoices to ensure that bills are properly expensed off and setting dates for payment and paying the bills that the company owes to various vendors and suppliers on a particular date. That is, if you see the transactions on a particular date, what is the amount that has to be paid to the outsiders and what is the amount that has to be received from the outsiders. So, that can be easily ascertained by accounting. So, that is to make bill payments. Next, to prepare the forecast as well as budgets. So, depending upon the financial information, that is by accounting, whatever the financial information what we have got, so based on that we can forecast what would be the future profit, or we can predict, and even the budget can also be ascertained. The accounts department may need to prepare forecast or budgets of the entity's financial data to check the future profitability of the company. That is, by seeing the current year's position, so we'll come to know so what would be the production, what would be the future profit. So because a proper account is being maintained, so that they'll come to know on which transaction we can gain more, so what that has to be minimized, what that has to be increased. So like that, each and every transaction, so a detailed transactions will be there. So thereby they can forecast or they can create some budget for the future also. So the forecast or budgets can be overall, company budget, the departmental or internal budget and project budget. So depending upon the financial position of the business, budget can also be decided. Next one is to make financial projections. So if the organization wants to take up any new project, so in order to know that, he has to know the current financial position. What is the current financial position? Whether they are able to bear that project or not, whether the project is profitable or not. So like that, depending upon the financial information, so he can decide the financial projections. That is, functions of accounting involve preparing financial projections by analyzing the company's available financial resources, expected revenues, future expenses, etc. Using this information, the entity can predict the project validity, future business expansion as well as growth. So when they take up a new project, of course the business goes on expanding. So in order to take up a new project, they have to know what is the current financial position, whether they are able to take up the project or not, whether they are able to invest in that project or not. So that can be ascertained, that is, financial projections can also be made by accounting. Next, to make available records for auditing. So of course, after the preparation of financial statement, the auditing also takes place at the end of the financial year. So in order to go through auditing process, of course they should have a proper financial records. So that can be done through this accounting, because all the transactions will be preserved and it will be recorded safely. So thereby, during the process of auditing, all the available records can be presented easily. So it is the responsibility of an accountant to make available all the needed financial records from which the auditor of the company that can conduct financial audits of the company, identify accounting discrepancies and provide corrective solutions. So correct solutions can also be taken, and if there is any changes that has to be made, or if any difficulties that has to be faced, or if there is any information is not sufficient, for that a proper measures can also be taken. And the next one is to keep the financial resource up to date. So all the financial resources, that is the resource that can be measured in terms of money, so those resources can be made up to date. So the functions of accounting can also be used in checking the financial weakness and strength of the organization. So whether what is a current position of financial resource. So whether we have sufficient financial resource or whether it is insufficient. So such type of decisions regarding the finance can also be taken here, providing solutions and strategies to conquer the weakness and improve the strength. So what is the current financial resource which is available in the organization, or if it is too weak, how to improve that. So such measures can also be taken. So these are the functions of accounting. And the next function is that for a review of performance. So in order to ascertain the performance of an organization, so whether the organization is in a good position or not. So in order to review that, this accounting plays a very important role. So accounting also involves performing regular financial reviews and fixing some performance evaluation. So it keeps on reviewing. So what is the exact financial position of the organization? So what is the current situation? So what is the weakness of the financial resource in an organization? So here a regular evaluation as well as review of finance of an organization takes place, often through accounting, because in accounting they'll come to know the exact financial position. So evaluation criteria for each of the company's different department to check their performance and give rewards to one of which fulfills the performance evaluation criteria. So overall we can tell that, so this accounting will help to review the performance of an organization. What is a valuation criteria of an organization? And the next one is to comply with legal as well as statutory requirements. So this accounting will also help to overcome this legal as well as statutory requirements, or to fulfill the legal as well as statutory requirements. So in an organization, of course, they have to follow certain rules and regulations, that is, legal aspects have to be followed, for which certain records has to be submitted. So when the organization is maintaining a proper accounting information through the records, so thereby they can present or they can comply with legal as well as statutory requirements. So whenever legally, if they want to produce any of the documents of an organization, if it is properly maintained, then it can be properly presented. So these are the few functions of accounting. So in my next session, I am going to discuss the next topic, that is advantages of accounting and disadvantages of accounting. Let us see what are the advantages and what are the disadvantages of accounting. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.